One thing I got to ask you before we get into the individual companies, something like 50,000 on the Dow, does it mean anything to you when you think about the overall market trade?
I'm sorry. I was surprised by that number too. I didn't realize that's where we were. So
that says a lot.
I guess if I'm honest about it, no.
Fair enough, which is what we want. We love the honesty. Hey, let's get to what has been a trade. Depending on the company reporting, the AI spend and AI trade, some have been punished, some have been not. Any logic to it in your view?
Yeah, I think so. We're going through a free cash flow desert. So there's no question that the level of investments is higher than we all thought, a month ago at the beginning of the year, and certainly a lot higher than we thought a year ago. Nobody that I know of, and I didn't forecast this amount of capex spend by the major hyperscalers, the four companies you mentioned earlier: Amazon, Meta, Google, and Microsoft. So I understand the market's hesitation, and what it means is that free cash flow is going to be tested, and Amazon's going to have negative free cash flow this year, first time since 2022. I think Google's going to be positive cash flow. I think Meta is, but these huge amounts of capex spend are challenging that free cash flow generation, and investors are right to be concerned. What investors should also, though, focus on is what are they seeing in terms of ROAI? Like, what kind of returns are we getting? So, Google is ramping up its capex by $90 billion. That's actually the biggest dollar increase. But what they gave you this last quarter was an acceleration in search growth. Was the fastest that they've had in 4 years. What they also gave you was almost 50% growth in cloud revenue and 150% growth in cloud backlog. That is all generated, or in large part generated, by AI. So there's an example here of a return. And by the way, Google had record high operating margins in the last quarter. Amazon just gave you 24% cloud revenue growth, AWS revenue growth, fastest in 4 years, also with very consistent margins, and the backlog jumped by more than they've ever had in a single quarter, something like 40 billion. So I'd argue that there is an ROAI on these for these companies. I can make the same point about Meta, and I think investors just need to be able to work through this free cash flow trough year. If I'm right that it's the trough year and you're going to have accelerating growth that'll take you into 27, I think that sets up these stocks, given their current valuations, very well.
So Amazon right now is down just about 7% as we speak. You've got an outperform rating on the company, $285 price target. Andy Jassy said yesterday that the money would predominantly go to the company's AWS. Most of it would be for AI workloads. He said, quote, "I think this is an extraordinarily unusual opportunity to forever change the size of AWS and Amazon as a whole. We see this as an unusual opportunity, and we're going to invest aggressively to be the leader." Is he right?
Well, he's right that they're investing aggressively. He's right also that almost certainly this is a huge opportunity. I mean, the market certainly thinks so. We wouldn't be going through SaaSmageddon or whatever, this sell-off in software stocks. Yeah, SaaSpocalypse. We wouldn't be going through that if the market didn't think that some of the innovations they're seeing out of OpenAI and Anthropic weren't potentially, dramatically negative for these names. Now, the market may be overreacting, but the market is reacting. And then I just, ask you all to step back a little bit here. Have we seen material improvements in the products and the services that we use because of Gen AI? And I think if we're honest about it, the answer is yes. You know how much search has improved, like as a product, as an experience, how much better it is. The things you can do now, this is like your Google moment of 15 years ago. Like, what was life like before Google? It's kind of hard to remember. I think we're going to have that same moment. Like, what was life like before generative AI? When you can, and we're still scratching the surface. Like, we still haven't had the task. We haven't circled to the task like great, you've given me all this information about a Hawaiian vacation package, but then put it all together and book it for me too. Like, make that. And then I really want a personal digital assistant. I think we're all going to have one, in 3 to 5 years. By the way, Gemini personal intelligence has sort of become that for me already in a pretty short period of time. And the ability for this to improve people's productivities, their lifestyles, if you will. I just think that these are their ability to educate themselves, train themselves, learn new skills. I think it's extraordinary what we're seeing. And so, yeah, I believe in the cycle. I'm sure there's going to be overbuilding during it, but I believe in this cycle. And I think there's a couple of companies that are really going to come out financially much better because of it. And I think these are 3 or 4 of the companies that can do it.
That's where I wanted to go, because reading in, this kind of winner takes all or winner takes most kind of view out there. And that's why these guys are all doing a mega capex spend, Meta, Microsoft, Amazon, and Alphabet. Are they right about that? And I do wonder, will there be one leader, or is it going to be enough that all 4 of these, Mark, are companies we will continue to talk about 5 years from now, 3 years from now, 10 years from now?
That's a tough question, Carol. I think we'll be talking about them. The question is whether they're going to be materially, larger from here or not. The advantage that they have is that they already begin with these massive bases of users and businesses and applications. And so you're taking productivity enhancements, productivity dramatic improvements to, massive retail, advertising platforms, entertainment platforms. And my guess is that these large platforms are going to be a lot better. They're going to be more efficient. They're going to have higher margins. They're going to have higher revenue bases than we would have thought 3 years ago. Yeah, the capex in 2026, the investments are greater than we would have thought 2 years ago. If we're honest with ourselves, the revenue bases are also bigger than we thought, and the profit pools, not free cash flow yet, but I think that's going to snap back next year. Profit pools are going to be bigger than we would have thought 2 or 3 years ago.
Mark, we've talked about where you're optimistic and some of the winners, but where are you not optimistic when it comes to this spend? Who ends up losing as a result of this capex spend and of this investment?
Well, companies that aren't able to make this shift. The one set of companies I've wondered about are the travel companies. This is an information-intensive transaction. I think it lends itself to an agentic solution. I think the average person would have spent 3 hours planning an annual summer or family vacation. I'll think about all the things that go into that decision, and then the booking, and then the checking out alternatives and flights and blah, blah, blah. And I think this is wonderful, opportunity for agentic solutions to really sharpen that, to make the whole planning, booking process a lot better. Booking.com, Expedia, and Airbnb better be effectively and successfully investing in agentic travel and having their own agentic agents on their sites. Because if they don't, then those are companies that I think could be dramatically smaller 3 to 5 years.
And you do cover those. You do cover those 3 companies too. So you know what are they? Do you think they're doing a good job as of now?
I think so, but I haven't seen the proof yet. By the way, nobody's really put together a great agentic travel experience yet. It's TBD. Yeah. You can use ChatGPT and Gemini, but you come up with great for travel planning, but you can't then you still got to go somewhere to do the booking. Somebody's going to put all that together. I just don't know who's going to do that first, but I think there's a decent chance that Expedia and Booking will do it. But then I step back and think about valuations across these names, and if you're telling me that I'm going to get Expedia at 15 times earnings, Booking at 17 times earnings, Amazon and Meta at 20 times earnings, hey, I'm in. I think those are very reasonable multiples. In fact, I think they're pretty dislocated. So, I think a lot of the fear is already in these stocks.
I was just looking at Expedia. It's down about 17% year to date, and you've got Booking down about 18%. I'm not saying that there's a clear connection, but just putting that out there.
Yeah.
Hey, Mark, just got 30 seconds. As we go through this, there's going to be stops and starts, right? Because we are very early in when it comes to this AI spend and build out.
Yeah, you're right. Yeah, we are still. We don't. Agentic commerce. There's some interesting examples. I love what I'm seeing out of Amazon with Rufus, but I want to see more Rufuses out there. And Rufus can still improve materially. So I think we're still early, but I want to see people closing the loop. In terms of the information and the transaction. You want agentic task agents. They're not